When it comes to cryptocurrency and investing, there really isn't any rules that are set in stone on how you make money. Now, there are speculations on how you make money in crypto. Some will tell you um, just grab big bags of the most riskiest play that you can get your hands on and sit back, wait for that money to come in, baby. And then others will tell you, no, no, go with the solid plays, your Bitcoins, your Ethereums, anything in the top 10. You set it, forget it, move on. And then some will tell you just stay away from crypto altogether. Play the lottery number, right? Well, there are ways that you can come out on top in the crypto market. There are ways. There are proven ways. But one thing you have to get out the way first. You have to get in the game. You have to get in the game. You have to invest in order to make some money in crypto. That's first and foremost. And you need a strategy. Strategy, right? You need a strategy. What's the best strategy? I talk to a lot of people about cryptocurrency when I'm not talking to you guys. Family, friends, some of which, they really want to make some serious money in crypto, but they don't know where to begin. Now, you can tell people what plays to jump in, and you can tell them not financial advice, but here's where I would put some money. And I would be lying if I told you there's a perfect time to get in. There's a perfect time. When you think about it like that, and we talk about the fear and greed index and how that's about as perfect as you can get. When people are fearful, you should be buying. And when people are greedy, you should either be selling or doing nothing at all. It's that simple, right? Not so much. Because what about the person who wants to get into crypto, don't have a lot of money to play with, or they do have a lot of money to play with, and they're looking for that perfect opportunity to jump in, kind of like double dutch back in the day that people used to play in the neighborhood. That perfect time when you jump in, that you wouldn't just blow the game, right? And everybody get angry and throw things at you. Yeah, that. Well, dollar cost averaging is something that you and a lot of you know it as DCAN. It's a term that's thrown around so much. You'll see it. I'll even throw it around. People in the comments will throw it around. You'll read it in articles, one of which we're going to cover today. But you'll see this term in a lot of you guys, and when I say you guys, I mean you guys, meaning not all of you, but some of you may not understand the concept, the real concept to it. A lot of you I talk to down in the comments often, and I'll tell you actually in videos I've told you that, yeah, I'm getting in this play right now, even though it's up a little bit, because I don't plan on selling that play. And I already know I'm going to dollar cost average anyway. I just want to make sure that I'm in right now, just in case it doesn't fall back down. Because in cryptocurrency, no one knows, right? No one. So that's what we're going to discuss today, the dollar cost average. But we're going to do it in detail. And there is a method with dollar cost averaging that someone that is 19 to like 25 can use. And then there's the play that, or the investor that they don't want to take a lot of risk, but at the same time they want to have a position in cryptocurrency in their portfolio open. They want to be able to get in some kind of way. And they don't want to miss the boat. That's the most important thing. You don't want to miss this boat because it will sail off without you. And you will see all of your friends who did take that opportunity, and bought some of those cryptos, some of them that I've talked about, or other YouTubers or friends or family that they talked about, doesn't really matter. You just got in. You'll see them. There will be signs. You'll see signs that, wait a minute, something has changed over there. Is that a Lambo over in their driveway? Could be. Never know. But you have to get in the game to experience that. And that's what we're going to talk about, the dollar cost average, guys. If this is your first time here to Grow Rich, Grow Happy, I want to thank you for dropping in. Say hello. Smash that like button. Even if you don't say hello, just smash the like button. It does wonders for the channel. Gets us up in that algorithm. And take a look down below at all the freebies. Namely that merch store. Got some cool stuff down there. Mugs, everything. I feel like sometimes you need a reminder of what you're in this for, what you're in the game for, what you're trying to accomplish. You'll find that down in the merch store. All right, guys, let's jump over here and check out this. Actually, it was a survey that was done, and I love surveys because you're hearing it directly from the people rather than someone sitting up and saying, "Oh, I think this is what people like." They actually tell you what they want to see, just like the surveys I do on Grow Rich, Grow Happy. Okay, guys, let's talk about it. Crypto investors prefer dollar cost averaging DCA strategy, Kraken Survey finds, and Kraken is a good one to do a survey because they are a huge crypto exchange. For those of you that are wondering, I am on cryptonews.com. I will tag this article down below for you guys because I'm sure a lot of you might want to actually take some of this and use it in your own crypto investment strategies. Okay, it says 83.5% of investors have used DCA, with 59% still employing it. So, guys, that should tell you right there it is an effective strategy. But a lot of people may not understand quite what it is all the way. You know, it's dollar cost averaging, and you can. I think I actually have a download on my website. Make sure you check out my website, free download where you can check this out. I think I have a PDF that you can download that tells you exactly how to do it. But let's go on down. Let's read some. The recent survey by the cryptocurrency exchange Kraken has revealed that most crypto investors, including myself, favor the dollar cost averaging approach when purchasing digital assets. Now, it's conducted with over 1,000 respondents. The survey, published on October 7th, revealed that, I already told you 83% of investors have used DCA, with 59% that are still using it today. And those 59% that are still using it today, I'm telling you guys, because they know this bull run is ramping up. They don't want to miss out. Okay. Here it is here. DCA is a strategy where investors purchase a fixed dollar amount of cryptocurrency at regular intervals, regardless of price fluctuations. And I think sometimes, the only reason I know this is because I've talked to people and they've misunderstood what DCA means. And they tend to think that DCN could be, well, I'm going to buy today at maybe 8 cents, and I'm not going to buy any more unless it drops down beneath 8 cents, and then I'll get some more, rather than just buying continuously, so you don't miss out. So that's one of the biggest misconceptions that I find. Okay, DCA helps minimize the effect of price swings, and this is why. According to Kraken's research, this approach helps minimize the effects of short-term price swings, because I ain't even gonna call them short-term price swings. They happen every millisecond. We got these price swings this cycle, and it mitigates emotional decision making, a significant factor in the volatile world of cryptocurrency. Guys, let me tell you what they're really saying. They're saying it mitigates FOMO, fear of missing out. That's what it mitigates. All right. The survey showed that 46% of respondents viewed the primary advantage of DCA as its ability to hedge against market volatility. And for all of you people who are new to crypto and you're a little bit older, and I understand there is a divide, and my subscribers, for all of you older investors, it's no different than your 401k. that you steadily have coming out of your paycheck going into um, investments, your portfolio. So it's the same thing. It's kind of like you're setting it and you forget it. A lot of you have money coming out, going into your 401ks or your retirement plans, and that's being invested regardless where the market is. It's not like it's just sitting there like waiting and double dutch, waiting for that perfect opportunity to jump in. It's steady going in, regardless. It's the same principle with cryptocurrency. You just might have to, and you don't have to, because I know I was finna say you might have to actually do the work and actually go in and make these investments. But I know exchanges like Coinbase has it where you can have parts of your check just invested into your different crypto assets and picks that you have. So you can do it that way too. I just choose to go in because you know, I'm always changing. I might buy this today and tomorrow I might want to buy this. So my strategy is a little bit different, but it's still DCA. It's just I DCA a little bit more often than a lot of you subscribers out there. Okay. It says the appeal of DCA varies with income levels, and this is what I was talking about, guys. For investors earning less than 50,000 annually, the main benefit was the encouragement of disciplined investment habits. And this is one thing I learned even when I was working in corporate. You know, even when you get these raises, you have to become a robot and say, okay, I got a raise. I haven't gotten that raise yet, so what I'm going to do, I may go up $50 or $100 on my investment to my 401k. Therefore, when my money hit, it's a psychological thing. I don't see it. So it's the same thing with this. You just you discipline your mind so that you just keep doing it like a robot. Now they say in contrast, those earning above 50,000, especially in the 175,000 to 199,000 range, prioritize DCA's ability to reduce the impact of market volatility. Now, guys, even the people with the major money, $250,000, these are the guys, they're using the exact same method. Follow the breadcrumbs of wealth. It's right here. Nearly 70% of investors in this income bracket consider this the strategy. They considered this the strategy's most significant advantage. Okay, despite the widespread adoption of DCA, only about 8% of investors maintain this approach during periods of market losses. And see, and that there it is right there. That's the difference between those that have and those that don't. Only 8% people continued that during market losses. 8%. You see why the fear and greed index is so important now, because if you use it correctly, you continue buying. So many people are fearful now. They're scared. They're scared. This is why there's such a gap between the wealth and those that don't have wealth. That's what we work on this channel, guys. Okay, they said the survey noted that investors using alternative strategies showed a greater likelihood of staying consistent during the market downturns, guys. And this is what it's about. Now, it should be also said, high income investors, particularly those making over 100,000 annually, displayed a stronger ability to adhere to their trading plans amid market fluctuations. Do you see the difference, guys? To follow the breadcrumbs to wealth. If you're over here and you're following these breadcrumbs, guys, it's going to be a mindset shift that you're going to have to do to reach that kind of money, to where you're a robot. You're a robot making these decisions. Now, let me jump down here real quick. It says younger investors are more inclined toward riskier strategies. And it says here the survey also revealed differences in strategy preferences based on age. And it says younger investors between the ages of 18 and 29 years old were more inclined toward riskier strategies, with half attempting to time the market. And guys, I'm going to put that down below. But also, and I'm going to add to that, that also with those those younger investors that are doing that, these are a lot of the investors that are in crypto, the young. They see it. They have the vision, and they have the cojones to take these higher risk, which is why they get higher rewards. Last bull cycle, there was so many age range between 18 and 29 driving Lamborghinis. You couldn't even get a Lamborghini because they were all out of stock, because all of these young kids, young adults, were making that money. A lot of them don't even have to work today, guys. What's the difference? Mindset. A lot of people might say, well, it's because they're younger. They can take these risks. But I say we can learn a little bit from that young crowd. That's why I say if you want to make money in crypto, some real money, you're going to have to take on a little bit more risk. And just because you take on a little bit more risk doesn't mean you have to back the truck up to it and just dump all of your finances into it. But it does mean you have to be open to change. You have to be open to change. And by all means, you have to be able to DCA, dollar cost average, guys. So you guys let me know down below. What do you think? Do any of you use DCA strategy? I hear it a lot down below in the comments. I'm always DCAing. Actually, last night I was DCAing a bunch. ICP, bought some more ICP. I bought some Arkham. What else did I buy last night? ICP, Arkham. I want to say I bought one or two more projects. Just DCA'd a little bit into them. And that's the strategy you take. I saw the market was down just a little bit. I said, hey, let me add some more to my bags. So you guys let me know down below. If you're DCAing, what tokens are you buying right now that you're DCAing into? Or what bag is you trying to fill? To the next one, guys. I'm out.